research and content in an hour and a half than you just did here.
You're so good, thanks.
We're going to top it off with Adam Button.
I'm only here for Adam Button.
Yeah, Adam, Nick said she was going to welcome you in the green room.
I said I won't be able to do my charts. I'll be entertaining Adam in the green room.
And Grega, thanks so much for your clarity. Steve, thank you too. And Nick, you know, Celio says that you were mesmerizing him. So, Adam, welcome to F.A.C.E. Nice. I'm glad you're returning to us. I'm going to make you the presenter now, buddy. Looking forward to hearing your voice and talking to you. Everybody, this is Adam Button at FX_Button. Also, you can find Adam at Forex Live. How are you, my trading warrior brother? How you doing?
Hi everyone. Hi Nick. Hi Dale.
Hi Adam. Hi.
I'm doing very well. I'm not sure what I've got. Let me get the.
You got real estate prices.
There we go.
Yeah, you got real estate prices up there, buddy. Before we get to that, economics. Yesterday when I was promoting your appearance here, and I said Adam will present his elite seasonal views, and someone came back and asked, what's an elite seasonal view? And I said, good catch, because all of your views are elite, not just seasonals. So I found it very interesting. About a week or two ago, you sent me a Skype message, and you're asking me what I thought about Qatar. And, you know, with things escalating there, Qatar did not meet any of the conditions that the other Arab Gulf states were demanding, and doesn't look like they're going to. And you actually asked me if I thought there could be, Saudi might go to war with Qatar. What's making you think that?
Well, I mean, the list of demands is ludicrous. I mean, it's basically asking them to hand over sovereignty. It's saying, you know, give up control of your media, give up control of your government, give up control of your foreign policy, give up control of your domestic policy, and we're going to review it every month. So what they're asking for is basically taking over Qatar without war. And if that's what they want, and Qatar is denying it, which they have since, or not denying it, but rejecting it, then the only other way to achieve those goals is via violence or some kind of takeover. And, you know, when you look at the big picture, I mean, clearly that hasn't happened. The 10 days have expired. It was sort of presented as an ultimatum, said do these things or else, and here we are at or else, and well, there has been no or else, at least not yet. And you really have to wonder what the idea is. Now it looks more like Saudi Arabia is just going to try to bleed them out with this blockade, and maybe I don't know, try some sort of coup later, or maybe they're in the belief that Qatar will come around to whatever it is they really want if they don't want these things. But
you think the Saudis have enough firepower to fight a war in Yemen and expand into Qatar if they can't find a covert way of regime change there?
Yeah, well, I think Saudi Arabia has this massive military, right? But it's just a completely ineffective fighting force. I think that in terms of numbers, it's huge, and you know, the setbacks in Yemen show that it's really poorly disorganized, poorly operational. But in a bigger picture, you have Saudi Arabia, who is struggling, right, with low oil prices. It's going to struggle to govern. You clearly have some friction within the royal family, and maybe that's been resolved, maybe it hasn't. And you know, one of the solutions to problems is always war. And obviously it's a bit of a black swan, and there are very few people talking about it, but Saudi Arabia is unhappy with Iran. They clearly feel that they have stronger support from the U.S. than they have at any time in the previous 8 years, if not longer. So, you know, they have this window of opportunity if they want to do something that now would be the time with Trump as president. So, you know, why can't it happen? I think they could easily defeat Qatar. Of course, you have Turkey in there. You have the United States base in there now, but obviously they could work around that. So I think it's something that's on my agenda, at least, I'm just not sure why that's not a bigger risk. And since we started to talk about oil's up, what, $5 since the bottom there, so maybe that is part of the story there more than we're giving it credit for.
Okay, Adam, very interesting.
I would like to say one thing about that I'm watching, because politically we had to move all our forces out of Saudi Arabia because they weren't very happy with us there. So we have the West has about a 10,000 strong detachment in Qatar. I know this because my cousin's there. So the first sign I think that it's all going to go horribly wrong is if they all move, and we will hear about that.
And you think they'll move to Qatar?
No, they're in Qatar.
They move them out?
Yeah, they're all in Qatar. They'll move out of Qatar. Yeah.
Right. Okay. Interesting.
So I think so I think for me, and I completely agree with Adam, I love his insight. That's what I'm watching as the first sign that it might all go pear-shaped.
Okay. And Nick has a military background, so.
Yeah, of course. They should be the best. I would like to ask her, what could they fight a war in Qatar with just avoiding that area altogether where that huge military base is?
Honestly, it would be an absolute disaster if this happened. Like the Sunni Shia split would be complete if that happens. It would just be a disaster. I believe, and I've been led to understand that people are working very hard to make sure this doesn't happen. But the force, in the Middle East, they've all lined up. Israel, Saudi Arabia, they're all lining up, and that's how the divide is. So the Sunni countries, and then the Shia countries, Iran and Syria, and so this is where the split is. And I really think, the Syria problem is really the start of all this. In Iraq, when we went into Iraq and we divided it, this is where it all comes from. So,
and Adam, that support.
Very tricky, believe me. It could all go horribly wrong.
And that support that Saudi feels from the U.S., we all know how temporal that could be. Xi and Donald Trump were pretty good friends at Mar-a-Lago, and now there are sanctions on Chinese banks, potential trade war. So enough of politics.
I just think one sign of the way for me that it's been changing is, when Trump came to power, it was all about he was going to get ISIS, and ISIS were the target in Syria, and the rhetoric has changed a lot to it's about Bashar al-Assad now and less focus on ISIS. The smallest thing, if they can blame a chemical attack on Assad, and I really think they're trying to switch the narrative to make him the bad guy as well. I've noticed that. And the news, I don't know, I think it's quite controlled. I believe about 50% of what I see and not much of what I hear. Like, it's really...
I just don't think, why would Syria perform a chemical attack? I think that's what everyone's asking, that they're winning the war.
Exactly.
It would just be the stupidest thing to do.
And ISIS is on the verge of losing their last piece, their so-called capital now. So, they're not going to go away. They're going to be in a different form. It won't be a caliphate holding land.
Well, maybe they just do what their Saudi bosses tell them, Who knows?
Yes. So Adam, let's talk about...
Bye, Adam, and thanks.
Oh, yeah. You have many fans in here. Nick likes you as much as Jamie Satley. So, partner, what do you see? What are you seeing seasonally? I know that here we are. It's really the first trading week in July. What's on your radar screen for seasonal influences in the market?
I mean, always disclosure with the seasonals. It's just one tool in the toolkit. But last time we were here, we talked about Aussie strength in June. I think Aussie was the second best performer in June.
Great
so
call.
It works. It works a lot of times when all else is equal, especially when you don't have any drama from central banks or politics. And there certainly is some central bank drama out of nowhere, really, that crept up in June. But July is not a huge seasonal month in terms of trends, but one that is there is yen strength. It's a great month for bonds and yen. And that goes against everything that's been happening in June. Really, the yen was beaten up. Bonds struggled after rallying into June. because of hawkish central banks, so on and so forth. But it is, over the last 10 years, the best month for the yen, and that could lead to some weakness in yen crosses, or it would just be really a retracement probably at this point. So that's
they could be pretty deep, like especially in the guppy, right?
Oh, I mean, especially the way the risk trade works right now. You get these ripples in the risk trade. I kind of liken it to, taking a garden hose and whipping it. You see this bubble moving right through the market because of just, you get volatility in one spot right now. It might be bonds, it might be commodities, and I think it just, not instantly, but over 3 or 4 days moves into everything else and eventually kind of ends in stocks. And then you sometimes get this echo chamber going on at the same time. And I think it's a lot of these volatility funds. They look at cross assets, and as soon as they start to see trouble in cross assets, the selling starts, and then the selling morphs into itself because you have so many bets against volatility. And anyway, that feeds back into the yen. Anytime you get a little bit of yen strength,
that's interesting.
You start to see the selling in stocks, and then feedback.
Yeah, that's a contrarian call because a lot of people are saying this recent break in bonds, that's it. Utility indexes come off quite dramatically worse than even the bonds. So we're looking here at F.A.C.E, at the potential for corrections in the yen crosses. I have a great question from our community, and you're there and you've made some great calls in Canada. And the question is, hi Adam, is this the right time for the BOC to be hawkish, looking for a large short covering rally in USD CAD into the meeting, maybe 132 into next week? What do you think?
Just to finish the previous point, I'm sympathetic to that view on the yen and the central banks. I mean, boons are breaking out on yield today. So, but on Canada, I don't like the timing of what the Bank of Canada is doing, and I think they're going to try to frame it as 2 and done, maybe even just 1 and done on a hike, just to take out a little bit of the insurance from commodities. But do I think there's going to be a short covering rally? I think this is the squeeze right now. I think the market was very long. I mean, you saw it in the CFTC data. It was at record longs a month ago, and it got squeezed hard. And that's why we're down as low as we are. I don't think the market is short dollar CAD. I think the market's still long, so I don't see that profit taking to push it back up to 132, 133 ahead of the decision. I think we go into the decision right around 130, and that's about the extent of what I see it. I mean, obviously oil is the other factor in that, and the ebb and flow there. But yeah, I think it's not all the way priced in. I think the Bank of Canada is going to cut. Obviously not a lot of people saw that coming, me included, until Wilkins stepped up to the podium a couple weeks ago and hinted at it. But from here, I think it can still drop another cent on the headlines, and then it really depends on the communication. If they frame it as reversing the 50 basis points of cuts they did last year, then I don't think there is that much downside to go. If you look at yield differentials, look at where oil is at, I think maybe 128 is a spot to buy. And the technicals from there, because there are some issues with housing, as I was just writing about, as you alluded to.
Yeah, you're going to show that, but you know what I find interesting? How many times have I interviewed you, Adam, over the years? 10, 15, 20 times?
Not enough, Joe. We don't speak.
All right, yeah. What I see are 10-minute charts up here. So I have a question for you. Is this a time frame that you make a lot of your scalping decisions and news decisions on, this 10-minute time frame?
Yeah, I've got these old, it's an old Netdania chart, and I've been using the same chart package for 10 years at least.
Okay.
And you kind of get used to it, right? You look at it all the time and pick up those messages. And I mean, we monitor the news a lot, so you pick up those spikes pretty well on that time, and you can see really over the last day or so. So it's 15-minute charts are probably a little bit more common, but I've always liked the 10-minute chart, and you really, some of trading is what you're used to and what you've been using for a long time, and that's really what it is for 10-minute charts. And I find it's a it's a good time frame. I mean, I have really everything and flick between them, and you need to know the daily levels, of course. But
it's interesting because most MT4s don't break it down to 10 unless you customize it. But I found it interesting, a 10-minute time frame, and I was going to ask you, you bring up summer trading, and I was talking about this in a previous interview. Do you lower your expectations because ATRs are compressed during the summer?
Well, I think one of the interesting notes in the seasonals too is that volatility is higher in the summer, and the usual rhetoric or the usual line is, well, it's summer, it's doldrums, nothing's happening. But at the same time, you have more of these spikes. And sterling today, we saw it, cable up about 40 pips there very quickly. It wasn't news, it was some flow, some technicals. I just popped up that chart there on the right-hand side, and it came off later, and I think I like it, especially when it's not on news. If you have these spikes, and I think just like cable here today is to fade it when you get these no news moves, and as you see over the last few hours, that spike has evaporated. But it is more common, and it is a little bit more treacherous if you're scalping or trying to work in 10-minute trades.
Yeah, so stop hunting is even more prevalent in thinner liquidity markets. They're going to go for the stops for liquidity to put on positions.
Yeah, absolutely. Yeah. The amplitude of the noise is just higher and a little bit more random.
So let your trades breathe, right? Don't suffocate them, trying to trade them with 10 pip stops.
Right, and wait for the opportunities. I think it's like, that's the best advice at any time, though. Just wait for the opportunities, but it's much easier said than done.
Any other individual pairs? Aussie took a pretty good hit on the inaction by the RBA. Kind of went to resistance and came off pretty good. You have Euro up here now, but
yeah, I think
stay here with Euro. What do you think?
Nothing's more interesting than the Euro at the moment. Just buy the dips is back on, right? I think if you look at today, it's the dip. I think everybody was looking for that 200-300 pip dip to buy. It's never coming. We might have talked about that last time we spoke, because all the dips, they get bid up at 100, 150 pips max. And Boone's breaking out today. Yields are up just on my screen there, 9 basis points today to 56 basis points. And that's a big technical break in German yields, and it means probably the ECB is going to be more worried. But I think that's already priced in. I mean, the ECB has been trying to reel it in after that.
Yeah, they've been jawboning it. They use this from an undisclosed source at the ECB, and that's what drove some spikes down. They're going to try and jawbone it all the way up, aren't they?
I think, but they're not working, right? So they're trying this, and the market's still buying that. You got this huge spike. Draghi said the littlest thing about temporary inflation, and the euro was up a cent and a half. They tried to walk it down, and it was a 30, 50 pip dip down that got bid up. And I just think they're waiting in the weeds for the euro, and that isn't going to go away. And that's a trade I really like is not the 150 pip dips, but the 50 or 100 pip dips in the euro aren't going to last. And I like buying it, barring a lot of good news from the U.S. But I think it's going to take more than a strong non-farm payrolls report, or we had some strong ISM numbers just out, but it just doesn't seem to do that much for the U.S. dollar. Whereas if the euro gets a little bit of good news, it's off to the races.
Do you think that this shift is secular or cyclical in Euro USD? Do you think that there's possibly a confidence crisis in the world because of what things that are overshadowing the administration here in Washington, and perhaps his personality and interaction, and people talking about the U.S. stepping away and leaving a vacuum for ascending powers like China, and people just don't want to have they're paring their dollar holdings, which have been quite huge for a long time, and this could be just the beginning of a major decline in the dollar? Or do you see it as maybe a bear market rally in the euro 140 high, 103 low, back to 120 or so is, would just really be a bear market rally.
Yeah, that's right. I would more look at it that way. I think you can't bet on a U.S. decline just yet. You need I mean, it's been a lot of ineptitude for a long time in Congress, but the U.S. does okay. I mean, the story is growth, right? If the U.S. was able to hit something closer to 3% growth this year, the euro would be down at 108. Dollar CAD would still be up at 135. Sterling would still be, 400 or 500 pips lower. So, but they can flip a switch and pass some tax reform, and that will happen. Is the U.S. in a long-term secular decline? Well, kind of, relatively. I mean, China is stepping up. The emerging world is growing more quickly.
Right.
Everybody would like to have some diversification out of dollars or not be so tied to the United States, and that will happen over 100 years or whatever it is. But is it an acceleration? Maybe. I think this China, this Trump Xi sort of tiff that you mentioned can escalate, especially over North Korea. But Trump is one of these guys. It's all words, right? And I don't want to bring it back to politics, but until there are actions, it's tough to see. But it could be steel imports, right? That could happen this week, and then we are into the actions kind of phase. And it may be time to reevaluate. So there are a lot of tail risks out there compared to how markets are trading, whether it's Qatar, whether it's North Korea, something else to do with China, Pakistan.
Here's a tail risk, and I discussed this with your associate Ashraf Ladi about a year ago. And, that's before the election of Donald Trump and him going to Saudi Arabia, being treated very well. But Jim Rickards has a black swan event that the real depegs from the dollar. Can you see any kind of economic situation in the energy patch or something that would cause them to do that? Because that would be a major shift. The petrodollar is very important to the United States to be able to print. So what kind of situation could cause the Saudis to depeg from the dollar?
I just really scale it back from there and tie everything together that low oil creates changes in the world order. So I think oil is probably going to settle around $35, and budgets are unsustainable. Governments are unsustainable. Alliances are unsustainable at $35 oil. Some countries will try to adjust, but you're just going to have change in the world with $35 oil that is inevitable. And whether it comes from depegging the dollar or in Qatar or some other sort of destabilizing force. I mean, we're already seeing it in Venezuela, and maybe that has some kind of trickle-down effects to the rest of Latin America or elsewhere. And how it occurs is really, really tough to say. I mean, we didn't even know who was leading Saudi Arabia until 2 weeks ago when the the dynastic changes happened to predict that they're going to get away from the dollar. It's so tough, but you can predict that it's going to be a difficult time, and that lends a bit to bonds and to the yen and to some of these risk trades that are very vulnerable with the S&P 500 at 2,500.
Do you have a view on them? Are they topping, or could there be one more hurrah in S&Ps? What are you seeing? It's hard to call.
I like the hurrah. I still like the longs. You can't get away from it. Just a 3% dividend yield is better than really you can get anywhere else.
So it's still TINA. There is no alternative.
Yeah, no alternative to stocks, and if pension funds need that return. Everybody needs the return, and it's easy enough to fall in love with tech when it keeps paying. It's just one of those things that's going to be very painful when it unwinds. But you need to have this, right?
Yeah. So why are all the pension funds, many, including state funds in the United States, underfunded with such a dramatic bull market that we've had in equities? And they usually need like 7% returns to, keep things whole. I mean, if they're underfunded in this type of prolific asset bubble or increase in asset prices, why are they underfunded? And why could there be a pension crisis?
Well, I think it's just coming out of the crisis that they cut risk, and they were, more regulations came in, so they missed a lot of it. Pension funds did okay, by and large, but yeah, I mean, people are living longer, the regulations are tighter, that the money isn't there, and I think if you were to get 3 or 4 years of 5 or 10% declines in stocks, then it would exacerbate the problem, and then maybe they would want to take more risk. And it's just it's like traders. You take more risk when you should be taking less, and you take less risk when you should be taking more. And that's what happened to pension funds. And I think that's just human nature and the nature of the beast. And so how do they get out of this chronic underfunding? I just don't think they can. It ultimately just means people will be poorer, and there will be less money to go around.
So what are you looking for in the NFP tomorrow? And besides the headline number, what should we be paying attention to according to Adam Butt?
Yeah, I think the headline number you can ignore safely. ADP today was a little bit weak. It probably correlates and ADP has been stronger than non-farm payrolls lately, so correlates to something around 100K. But I think the trade for the past year plus is to trade the wage number, and the Fed has pointed to a lot of temporary factors in everything. It's like they're the world's most unlucky central bank. Every month it's pharma prices or cell phone plans going on 10 years now. They would have made their inflation target, but it always seems to be something. And if you look around the world, the wages are stagnant, so my guess is we'll see another miss there. But the Fed is pretty stubborn on wages, but the trade is definitely, even if you get plus 250K and you have soft wage growth, is to sell the US dollar. So the headline, it doesn't matter except for maybe getting a knee jerk to sell.
Okay.
And on the opposite side, if it's like plus 10K and you have strong wage growth, you have to buy the US dollar. I think that'd be a great trade as well.
So pay attention tomorrow after the NFP to Adam's reaction. I teach people to react to the reaction, not predict it, Adam. And thank you again for joining us here in F.A.C.E and edifying us. So I'm going to take, my takeaway from this interview is to be looking for potential declines in US dollar yen, and with that happening, some risk off and buy every dip in the euro.
I like it. I like it.
All right, partner.
Thanks so much for having me, Dale. Nice to have Nick there and the gang. It's so great to check in, and I hope everyone's having a great summer. Let's keep it going.
Yeah. Thank you so much, Adam, my trading warrior brother. I hope pips rain down on you until the next time we talk. So thank you, buddy. Everyone, thank Adam Button. I encourage you to follow him at FX_Button and at Forex Live. And that's a wrap for our show today. You're very welcome, David. Glad you enjoyed it. The guppy, when I talked about taking partial profits, you had some decent money made. Let's see what happens tomorrow. All right, so remember, most of all, I know we're all here just to make pips, but above all, don't just count your pips, count your blessings. And thanks for hanging out in the best webinar on the net, in my extremely accurate and humble opinion. All right, everyone. Have a great summer afternoon. See you tomorrow for the NFP. Let me get a vote here. You guys want to open a half an hour early for the number? Give me a Y if you want to do so. I need more Ys. Okay. Someone wants me to stay up all night. I can't do that. All right. So we will open our webinar 5 minutes prior to the NFP number tomorrow. And so I'll see everyone at, make it 8:25 Eastern. Enjoy the rest of your day. I want to thank Steve Volge for sharing his views. I want to thank Nicola Duke for sharing her harmonic work, and Greg Horvat for coming in here, the Wizard of Waves, showing his excellent work. Adios, everyone. Thank you, David.